Hey guys, Investuous here, and today we're going to be talking about how to invest in cryptocurrency. So let's start off with cryptocurrency exchanges. These exchanges give users an opportunity to buy, sell, and exchange cryptocurrencies for traditional currencies such as US dollar and other digital currencies such as altcoins. So to get started investing in cryptocurrencies, you need to register with an exchange of your choice. There are different cryptocurrency exchanges out there, and you should first research and get familiar with before trading. Always do research before registering in an exchange. There should always be factors that you need to take consideration of before picking which exchange is best for you. These factors should at least include fees, reputation, and security. The most popular exchange to trade Bitcoin, Ethereum, and Litecoin is Coinbase. The best exchange to trade the big three for Canadians, in my opinion, is Quadriga. It all comes down to your preference. Then, there are alternative coins, also known as altcoins, in which you can invest. These coins are generally more affordable in comparison to the price of Bitcoin. The best exchange you could use to trade altcoins would be Binance. They offer very low fees, they are consistently adding new coins to trade, and they have better customer support than most other altcoin-focused exchanges, they have highly liquid markets, and a better platform overall. If you like the idea to trade altcoins, kindly give this video a like. Moving on, now that you have registered in an exchange, you are now able to trade cryptocurrencies. This is where the fun begins. In trading, there are two methods used for researching and predicting the future growth of certain investments. These are called fundamental analysis and technical analysis. Fundamental analysis is the study of the overall economy and industry conditions to the financial conditions. In simpler terms, it is qualitative studies such as reading the news. Technical analysis, on the other hand, is the study of statistics generated by market activity. In simpler terms, it is quantitative study, such as analyzing chart patterns. You should always use these analyses when investing in cryptocurrency. There are many ways you could approach this. The safest strategy is investing in high-quality cryptocurrencies. These have large market caps that are worth over $2 billion. Market cap is the total value of the company's outstanding shares. These cryptos are generally well established and has a history of consistent growth. Although Bitcoin seems to be volatile at certain times, it is one of the best examples of a safe investment in cryptocurrency. However, there has been speculations that Bitcoin might be in a bubble. That is for you to do your own research on. So when is the right time to buy? Ideally, now would be the best time to buy cryptocurrencies. The sooner the better, since it is still in the early stages, it's more likely to rise in the future. If you've done the research on a certain coin and you think it's great, then in my opinion, I would invest in it right now and hold it long term. By not taking action, you risk the chances of buying the coin at a higher price later. Essentially, you would want to follow the rule of buying low and selling high. Low market cap coins are really profitable since it can double in price faster than a coin that has a high market cap. You would want to buy a coin early when it's still cheap and sell it after the price has gone up substantially. This is what you would call a long-term investment, since it would take time for the prices to rise up by quite an amount. However, if you weren't able to invest in it during the early stages, you could still profit a lot from buying on the occasional dips. The golden rule that I follow is to wait when everyone else is buying and buy when everyone else is selling. Buying coins at dips gives maximum financial opportunity. When everyone else is buying, this increases the price of the coin and you run the risk of overpaying for that coin. So we move on to holding. This is what numerous investors are doing. This is the practice of holding onto a long-term investment and not giving into the urge of selling when there is a small increase. For example, Bitcoin a few years ago was priced at $1, and now in 2018, it is roughly priced at around $8,000 to $11,000. People say that it is still in the early stages, and it is still going to continuously rise in price in the years to come. Most of the cryptocurrency investors claim that they have made more money from holding on a long-term investment instead of short-term trading. Short-term trading requires experience and knowledge on technical analysis. If you could spot chart patterns and are confident about the coin, then by all means invest short-term. Short-term trading is about accumulating small wins, so if you want to take this route, don't be discouraged if you don't see your account growing exponentially. Those small wins accumulate and become big wins. But in my opinion, where cryptocurrency is at right now, I would suggest to do long-term investment and hold. We move on to profits. If you are holding coins, that doesn't mean that you can't take profit from them. People take profits to secure them in another form such as the US dollar. If your investment has doubled or has exponentially risen, then you can take profits from it and buy more coins when the price dips. There is going to be inevitable volatility in the crypto market when it's looking bullish. This is the pattern that shows with most cryptocurrencies, occasional dips and new all-time highs. Investors also take profits to diversify their investments to other assets, such as stocks, index funds, real estate, etc. So what causes prices to rise? Well, if you've taken economics, then you should know that low supply and high demand will increase the price. If something has a limited supply and everyone wants it, then its value will increase due to the fact that it's not easily accessible. A great example of this that's happening right now would be the price of graphics cards. Everyone wants it due to the recent hype of cryptocurrency, and there has been a shortage of supply of it, causing the price to go up. So what else causes the price to go up? New announcements and projects, hype, and coins getting added to more popular exchanges like Binance. A great website to check out a coin's market cap, supply, and price is coinmarketcap.com. So, research. Always do your research before investing in a coin. I can't stress this enough. You could use fundamental analysis by looking at the news and looking at the company's foundation and projects. I would highly recommend looking at their white paper as well to see if they are legitimate and if their vision has a good purpose. Then you could use technical analysis to look at chart patterns. You should learn what support, resistance, and breakouts are. You could profit a lot if you could predict when breakouts will occur. And finally, I urge you to get a cryptocurrency wallet to store your investments. Never leave your coins in an exchange. By leaving them there, you risk losing your investments if that exchange goes bankrupt, gets hacked, or any other externality that happens. I am personally a big believer in hardware wallets because I see them the most secure since it isn't stored online. The Ledger Nano S is a great investment and I highly recommend it. In conclusion, do your own research before investing in cryptocurrency. At the end of the day, you are liable for your own investments. Only invest what you could afford to lose. To briefly summarize, first, you need to register in an exchange. Want to trade Bitcoin, Ethereum, or Litecoin, and another exchange if you want to trade altcoins. I personally use Coinbase and Quadriga to buy Bitcoin, then transfer them to Binance to trade altcoins. Once you are registered, do research on which cryptocurrencies to invest. Use fundamental analysis and technical analysis. Invest smart and only invest what you could afford to lose. Finally, store your investments in a wallet such as the Ledger Nano S. All you need now is a strategy, whether you do long-term investment or short-term investment. Never let greed take over. I hope you guys learned something from this video. If you have any questions or comments, leave them down below. If you gain value from this, please hit that like button. And if you want more videos just like this, subscribe. Thanks for watching.